Hello, beautiful people of the internet. I am the incomparable Stephen Harris, and this is Trill Estate. All right, so brief background history on me. If you don't already know, I went straight from high school into the music industry, had an amazing career with my group, G-Side. I don't know if you ever heard of it, but if you haven't, go look it up. It's pretty dope. Me and my guys, we pretty much changed the way that people get their new music. This was after the whole LimeWire, Napster age where people were just downloading music illegally. I definitely took part in that, you know what I mean? But this was like the beginning of the blog era, so there were a lot of music writers that were writing about music, and we just happened to be one of their favorite groups. So we got on those blogs really naturally and really by our own fanship. And people kind of took that, the labels, major labels kind of took that whole recipe and then applied it to their artists, which was cool. The music industry changed, the way people get music changed. Now it's all about streaming. And yeah, I pretty much got burnt out and decided that I wanted to do something else. And I had an uncle who was in the real estate, and he said, hey, I'll teach you the game. So I came to Texas, joined him in this whole real estate thing, and now I hope to do for real estate what I did for music, and that is basically change the way people perceive it, change the way people consume it. So now you have this beautiful thing that we call Trill Estate. And I noticed, man, while I was selling houses, man, for the past year, that a lot of my customers were on up in age. You know, we get like 40 plus. But here in Fort Hood, there are a bunch of people that are between the ages of like 23, 35, 36, and they have enough income, they have a great job, probably even have decent credit, but they just don't have the information and they think that getting a house is too hard. So I decided to make it my mission to educate my generation so that we could become homeowners and hopefully make owning a home cool, man. So I want you guys to holler at me if you got any questions about owning a home, real estate investment, or becoming a real estate agent. Like, I'm here to help. That's the whole point of the Trill Estate, so I can put it in a language that we can understand. All right? So let's just get into today's video. It's about the 700-point elephant in the room, and that is credit. So on the previous video, I got into it a little bit briefly, so I'm gonna dive into it just a bit more this time. But like I always say, man, do your own research. So don't just listen to me, do your own research, go and contact a mortgage professional, go find out like what your credit score is, because it's like having a wound behind a Band-Aid. You know, you never know how much it's healed or how bad it is until you actually pull that Band-Aid off. So a lot of us with the credit, we kind of think if we just leave it alone, then all the problems on our credit will go away. And I'm here to tell you, it just won't. You know what I'm saying? So it's definitely something you need to take care of, something you need to handle. And this is America, baby. And even America has a line of credit, you know, that's the national debt. So you got to make sure that you're on top of that, because there's a way to play the game. You can play it right, but you just got to make sure that your credit is up to par. One of the main things that people ask whenever I come across them, they ask what credit score you need to have to buy a house, and I usually say 600 and above, just to be safe. And that's what most lenders work with. Most mortgage lenders are going to want you to have about a 620. But I do know some lenders that work with people at a 580 and below. But here's the only danger of having that 580 is you're gonna get a higher interest rate. And if you don't know what the interest rate is, that's pretty much how much money they're tacking on to the money that they're loaning you. So the better your credit score, the better your interest rate, the less you're gonna pay over the long term. And also, having a better credit score, it's gonna make the conditions of your loan, it's gonna make them a little less strict. So if you're sitting at that 580, then the lender's probably gonna want you to have 2-3 months cash in reserves in your bank account, just to make sure that you are capable of holding some cash. They may require your spouse or whatever to get a job. You know, there's different requirements, different things they want. So the higher your credit score, the less strict they're gonna be on those requirements. And so there's a few things that if you have on your credit, they're gonna totally stop you from getting a house. One of those is a judgment, an unpaid judgment. So if, like, let's say you left an apartment and they got a judgment against you that you still owe that property management company and $500. That $500 is gonna stop you from getting it. So you might as well just pay that off. Late payments. So if they see that you consistently pay your $200 phone bill late, then that $200,000 house is not going to be yours because you're probably going to pay that late as well. Another thing is going to be any recent bankruptcy. Bankruptcy is when you pretty much tell all your debtors, hey, I don't have the money to pay you, clear my line of credit, I don't owe anybody anything. And that's all good, but like, it's going to take you about 7 years to bounce back from that. You can usually get a home loan before that 7 years, but it's going to take you a few years. So if you've got any judgments, late payments, or recent bankruptcy, it's pretty much a no-go on the house. Another thing that's going to affect you massively is going to be defaulted student loans, unless you come in conventional. But you're not going to get any government-backed loans with defaulted student loans, no FHA, no VA. You come in conventional, which means you're pretty much going to have to pay 20%, 30% down, but if you got that 20% or 30% to put down on a house, then you might as well just get caught up on your student loans and get you a line of credit and leverage that money. Yeah, be a little smarter with your money. That's pretty much all I got today. So if you got any more questions, anything else I can answer for you, leave them in the comments below. I always love likes and shares, comments, feedback, anything. It's oxygen to me, so send it my way. Yeah, and I'm signing out. Triple salute.